Let's talk about SoFi Q3 earnings. Of course, they have earnings pre-market on Tuesday alongside of PayPal. SoFi is one of those positions that's a long-term position for me. And about a month ago, I predicted that out of anything that I held in my portfolio and any other stock that's on my watch list, that it would outperform over the next year and a half. Now, to cut to the chase, and I'll give you the details in just a moment, I think that Q3 will be good, but maybe not quite amazing. Q4, I think, is where that begins to really ramp and come into play. Nevertheless, I'm very excited to see what happens with earnings. And let's take a little bit of a look here. Now, if you look at what people are estimating, we go up to analysts here. They're estimating a 4 cent earnings per share. And they're estimating that revenue is going to come in around just under 637 million. I think it'll be closer to 645. If you look at the slide deck of SoFi, I broke this out individually by platform, but I think tech will lag just a little bit. And I think that lending will not ramp quite as much as is expected, but I think that they're going to hit at least their high end guidance, maybe come in slightly above that. So look for about 4 cents, possibly 5 cents of EPS, which will be an upside surprise. Revenue will be an upside surprise compared to what analysts are expecting. And of course, they're going to accelerate their guidance. Now, why am I thinking this? Well, there's a couple of factors that are happening. First, their technology platform. Over the next year and a half, they have significant tailwinds. Synapse, of course, collapsed, and it was serving a lot of neobanks and fintechs. And there's some additional regulatory scrutiny that has really pushed a lot of companies that are operating without a modern banking core to find that solution. And of course, SoFi's technology platform, Galileo, has that. This, of course, happened some time ago, a little bit earlier in the year, but it does take time to, of course, sell companies on your product to make sure that it's a good fit for them, to find pricing, to agree, and then actually see that revenue. I think Q3 will be just a little bit early for that. By Q4, I think that we'll see some of that and, of course, have tremendous momentum through next year. So technology platform will grow a little bit slower year over year. Lending is something that I think is going to ramp substantially. And so lending itself, the reason for that is that Anthony Noto made a curious comment the previous earnings, and he did this and reiterated this on a couple of interviews he had. But he said the exact words was, "We could be more aggressive if we chose to allocate more resources to lending. That could happen because we have upside in other businesses." And he also mentioned that they are looking to diversify that lending platform itself. Of course, SoFi originally guided this year for 90 to 95% of what they lended for the previous year. The reason why is some capital constraints, but largely it was because of the fact that they were uncertain on the macro, which made sense at the time, and they were uncertain on how many rate cuts. They predicted, while everyone else predicted 5 rate cuts. They were predicting 3. And of course, I was thinking that we'd see rate cuts in March. We didn't see that until the end of September. So the thesis was delayed. It was not destroyed. Now, Noto and team has been a little bit more cautious in opening up the lending book. We did see more loans given out in Q2. I think we'll see that accelerate in Q3 somewhat. But I think with the rate cuts coming with significant interest in products such as home mortgages, although the mortgage rate has climbed since they've cut rates, and also because of interest in student loans, which there are fewer players in, we're going to see a tremendous ramp in SoFi's lending platform. This year, I think that they'll actually beat and exceed 100% from what they did last year, which is higher than guidance. And next year, I think that they will dramatically accelerate. There's a lot of room to operate and do that. Member growth, I think we're actually going to see the highest member growth ever for SoFi. Of course, last year at this time, they saw a little bit over 700 million new members. Part of that was the opening of the football season with their SoFi Stadium in LA. And part of that was a Taylor Swift concert. This year, I'm seeing a lot of marketing. Of course, rates continue to be high, and they're offering some matching now on Invest, although we won't see that hit this quarter. And so I think that we're going to see a lot more members come in over the next 2 quarters, especially. So the market should be pretty happy with these results. One thing also to keep in mind on the backside of this is, of course, loss rates. Now, SoFi has competitors for different segments of their business. Lending Club is one of those competitors, and they just reported earnings earlier this week. They had a tremendous beat. Well done on the Lending Club. But they just do loans. They service loans. They hold loans usually to maturity. They do sell some loans as well. And one of those interesting features with Lending Club and a couple of other providers as well is they're seeing lower loss rates in credit, and they're seeing lower delinquencies as well. SoFi has been lambasted for this, but let me show you what SoFi has and offers here. And right here in the earnings deck, this is in Q2 earnings deck, you can see their net credit loss estimations by loan vintage and their percent remaining. And so they expect to come in around 7.85%. So far, they've actually been beating that. And as the loans continue to mature, as the vintages age, you can think of it as fine wine that's aging there until the end of that loan. The loss rate actually begins to decrease over time. And so we've seen them actually tremendously beat their estimate on the net credit loss. Lending Club, which I think is a good company, but maybe not as efficient as SoFi is on the lending side, they posted a tremendous beat. Other companies like Ally, which basically offers loans to those that are looking to buy a car that may not have a good credit score, not nearly as high as SoFi or Lending Club, they're seeing more delinquencies. But overall, the macro is providing tremendous tailwinds, and that's something to look for in this earnings. And so the other thing to look for as well is as they're trying to diversify the lending business, I think we'll see a ramp in student loans, maybe not as much as I was expecting 6 months ago. There's some uncertainty there with how Biden, in his remaining time in office, and some legislation as well, works with student loans and lending, if there's going to be any additional forgiveness. But I think that that's going to be a significant tailwind also for mortgages throughout this year. And so we should see some fairly robust guidance for Q4 as macro certainty shows that there's probably not going to be a recession. If there is, it might be mild. And its lending ramps tremendously. Now, one other aspect to look at, although it will not hit this quarter, but it should be in guidance, SoFi announced a partnership a couple of weeks ago with Fortress that they are able to sell $2 billion worth of loans. Now, SoFi doesn't just hold loans to maturity and make money from that. They do hold some, but they oftentimes sell loans as well. And as rates drop, that becomes more and more lucrative. We'll see more and more of these type of deals. But that comes to the bottom line of what they're expecting for financial services. They're looking at, by the end of this year, about 80% growth through this year for the financial services platform. And so it'll be interesting to see if they're able to do that. Let's take a look real quick again at that guidance. If we go just one page down, that's where we see that is financial services net revenue growth. And to actually hit this 80% mark, which is not the typical cautionary guidance that SoFi offers, we're going to see tremendous ramp in that in Q3, but I think especially Q4. So this will be a case where it'll be interesting to see how the market actually reacts, whether they're going to go up immediately for SoFi or go down. My hunch is that we might actually see a little bit of a sell-off. So in previous quarters, we won't look so much at that. Usually, not last quarter, but usually SoFi runs into earnings, pops up, and then sells off a bit. That pattern is what I'm expecting, although I'm not betting on earnings. I only have a long-term play here for SoFi. And we see that we have ridden up a little over 40% over this last month from $7.78, of course, sitting just under $11 at $10.99. Don't be too surprised if they post very good earnings that have a triple beat with robust guidance. And by the way, I think Q4 is going to be phenomenal for SoFi, but that they sell off a little bit, just given this run up. You can see the RSI here, the relative strength index. It's sitting just close to 80 on the daily, and that's quite high. So it may need to take a little bit breather before we continue to run. I do think this company has a long way to run. I'm excited to see what they do. And until next time, happy and successful investing.